Hey, it's Richard with Matthews Wealth Management. This is kind of end of the year. The last video I'll do in 2023. We'll put this in the newsletter for end of the year, so we'll kind of cover it that way. But we are wrapping up November of 2023, and we're going to cover the asset class performance here. So everybody remembers this picture. This is what we experienced in NASDAQ. So pretty much large cap growth up 37%. And that was as of the date that I did this. So yeah, it kind of plateaued there. It's nice and boring, but everybody remembers those three. And then this was the concern of the pivot, much more pronounced in the S&P 500. So up 19.81%. That was a good year, by the way. Anyway, those 3 months actually got phone calls from clients a little bit concerned that we had such downward pressure on the longer or higher for longer narrative of the Fed until CPI, PPI, and unemployment rates started to look like what people wanted to see, thinking the Fed is actually going to back off of its federal funds rate, which 5.25 to 5.5 is the federal funds rate. If they back down on that, we'll see everything go up. So, I skipped too early, but yeah, same thing. No big deal. 8% on the moderate. But look at this. Equities. Oh, it's just stupid. Yeah, if we make credit and money more available and cheap for everybody, everything gets priced higher because the dollars are worth less. Worth less. Yeah, you get it. It's on purpose, that pun. So yeah, the big winner. Let's look. 41% on large cap growth. Small cap value 2.7. That's weird. Honestly, that should be the 6 and that should be the 2, I guess, if you're really going to go by the correlations that should exist in big and small companies, but who cares anymore? International follows the same curve because of the extra dollars. Hey, look, we've got some red. That's actually the long-term bonds that are still negative on the year, but if you recall, Matthews Wealth Management was very underweighted in long-term bonds up until September 21st when we went very heavy, and so we've been doing really, really well on that call, and chalk that up to modern portfolio theory plus Austrian economics. It's pretty common sense if you can learn the terminology. But yeah, we see a 9.37 on high yield. That's a great year for high yield, which we were neutral on, but still 1.16 on a monthly for short-term bonds. Why is that? Because if we're going to cut rates, the value of those bonds goes up. So all y'all that lost money on those long-term bonds last year in 2022, the opposite happens if we cut rates. So you might be too late at this point, but if you catch the subtext in what I'm saying, you would have already been there. So here we go. Oil, really rough month in November for oil. Yeah, it's December 12th today, so that's maybe going to shift. There's some speculation out there with the Suez Canal and some fun stuff going on, whatever. So gold up 11.5 on the year. Real estate had a huge month in November, up 12. And Bitcoin, hey, Richard, yep, that's a lot of profit. And I actually just got a text from them saying, are you ready for 100K? No, I'm not. But who's to say, right, what it is? Because it's speculative. No currency should go up in value 127% in a year. And then on the flip side, drop 50% the year before. I don't know, whatever. I mean, it's speculative, right? I like decentralized currency, and that's why I like gold. That's why I like cash. That's why I like the things that don't have attachments in terms of negative interest rates or penalties or expiration dates or any central bank digital currency garbage, which is pretty much what we've got, in case you didn't know. Let me ask you this. Anybody answer this, I'll give you $1, whatever that's worth. But how would we know if our current digital currency isn't on a central bank ledger that's just being maintained by the banks? You wouldn't. So anyway, who knows? So let's go back to see how Matthews Wealth Management and everybody else did for the year. Oh, it's not centered. Whatever. Deal with it. So the NASDAQ year to date for 2023 is up 37%. S&P 19, Dow Jones moderate 8.7, Matthews Wealth Management 7.2. Not thrilled, but whatever. Let's look at the long term. Those of y'all that got hammered in 2022 in NASDAQ, you're still down 8.5. S&P is actually the winner here. That's kind of cool. They're up 19 for the year of 2023, but if you factor in their losses from the year before, they're still down only 3.6. Cool. And then the moderate, who took all that interest rate risk loss in their bonds, they made 8 this year, but they're still down 8 point. They're the worst, honestly, way worse than the highest risk, down 8.7. And here we are down 5.25. So had you been in just the pure S&P 500, you'd have been doing better than being where we are, but we're way better than where the 50-50 or 60-40 or whatever little, set it and forget it cookie cutter you got has been doing. And if you're full on risk, that wasn't a winner either. So yeah, we're kind of middle of the road and happy with that. Actually, that's a 30% less loss by percentage of percentage. So yay, whatever. 2023 is weird. It's a flat December as we just saw in that previous one, but yeah, we'll see in 2024, and I'm sure stuff's just going to continue to be stupid, and we'll continue to cover it. Stick around for M2 balance sheet with the Fed, and then I'm going to do another video here, but hope you like the festive background. I'm in a different room at our church, so see you next time.